Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, the stock market pretty bouncy the last few weeks with some down days. How does it look now?
Yeah, it's definitely been a pretty choppy market since the highs got put in November. And, we keep seeing the market slosh kind of from, big waves of buying to big waves of selling. Really just last week we saw huge panic selling overall in the stock market. And now we're back on a buying craze here. Really the FOMC meeting caused quite the blip on the charts. We saw the SP 500 pop up, hit all-time new highs. And then it rolled over the very next day and sold off pretty dramatically, taking a lot of wind out of the sails. And the market continues to struggle. We've had a nice bounce over the last couple of days, but at this point, the market really has a lot of mixed signals. When you look at the internals and what's going on with the different sectors, we can see weakness. And the market trading sideways here is really just trying to figure out what it's going to do next. How is it going to react to the FOMC news? We really are seeing fewer sectors holding up. Most of the sectors are actually in downtrends and they're in a bearish phase, and that's not good. When the stock market hits all-time highs, yet most of the sectors are going lower, that tells us the big blue chips, the big stocks, are really doing all the heavy lifting, and there's not a lot of support in the market in general. So that's something we got to be aware of. And whichever way the market breaks from this consolidation between the November high and the current December lows, I think it's going to be a pretty big move, and we just need to wait to see which way it breaks for that new trend to take place.
With that trend, what are people buying?
Well, we've been seeing over the last couple of weeks, we've been seeing a lot of big money be moving into the defensive sectors. We've seen utilities perform exceptionally well, consumer staples, healthcare, bonds have been holding up for quite a while, showing signs that there's still big money moving into bonds. So when we see money moving into those sectors, that's generally a sign that the big money players are trying to position their money in sectors that no matter what happens in the economy, you're still going to need utilities and consumer staple products, and that's where money has been going. And we saw this happen about 2-3 weeks before the big crash in 2020. And it's something that I watch and I talk about with subscribers all the time, is we need to be aware when all these defensive sectors are actually outperforming the stock market dramatically like they have been. We got to be aware that big money might be preparing and they might be starting to sell off positions. And the big institutions are what create these trends typically. So if they're starting to move to defensive sectors, they're going to eventually start liquidating more of their aggressive shares, and it'll pull a lot of the market down. So I'm very aware that this market is, at this critical point here, where it needs to pick a direction, and whichever way it goes, whether it breaks to the upside and rallies or falls to the downside, I think there's going to be a fairly substantial move, potentially 8 to 10% rally or decline going forward. And of course, a decline will most likely happen a lot quicker within a few trading sessions, versus an upside rally could take several weeks for that to actually unfold.
When you're looking at this too, is this a good time to perhaps looking at trading some of your more popular stocks and holding on to the cash and looking for opportunities in the new year?
Yeah, I mean, what we're doing is we moved to cash recently here, and we're really just letting the market decide which way it wants to go. When the market has a mixed signal like it has right now, I find one of the best trades is to move aside or potentially get into a defensive sector until we see where the next wave is going. Are we going to rally or not? So to me, cash is kind of king right now. We are in a couple positions overall, but right now you really want to just kind of wait and see and let this market unfold. Now, we are into the holiday, the last few days of the trading year. This is typically the strongest time of the year, so I wouldn't be surprised if the stock market kind of drifts up here on light volume and trades a little bit higher. I don't think it's going to break to new highs, but once the new year is over, I think sellers could step right back in when they get back from holidays and potentially start driving the market big early in January.
Have people been embarrassed to go into cash because you're always told, well, there's no sense holding on to it. It's not going to make any interest. You're losing money because of inflation. But is it more important to think about if the stock market makes a major correction, you could lose 20, 30, 70% of your money?
Yeah, a lot of people make cash sound like it's a dumb play. It's just, for some reason, it's the way a lot of people see it. They see it as a wasted time, a waste of money. And to some degree, I agree with that. I think cash is a very short-term position. It's just when the markets have a really high probability of going in either direction very quickly and you don't want to get caught on the wrong side, we like to move to cash, wait to get a gauge on the market, get a confirmed trend, and then we'll move back into the market. So we don't sit in cash for long periods of time, but you definitely don't want to be holding the stock market when it's collapsing. And that's unfortunately what most people do. They'll continue to hold their stocks while the market sells off, and it can do a lot of damage very quickly, especially with the type of volatility we have. We've got 2, 3, 4 times the volatility we used to see back in 2015, 2016, or a long time ago, and the market here has very little liquidity. So when the selling does trigger, we see some very sharp drops. And to me, cash is an important position. It's a small one. We get in, we use it for short periods of time, but I think it's something you really do need, especially during a bear market. There's no point in watching your assets go down just because you don't want to be sitting in cash. Cash really can be a very powerful play. It allows you to keep your capital and then reinvest it at a lower price when dividends are higher and there's a lot more upside going forward. And not having to ride that roller coaster of a falling, collapsing market is almost priceless. It can really save your health in a lot of cases. Some people get so stressed when they see their nest egg collapsing in value and knowing that they just wiped out 10 or 20 years worth of work. That is not worth it. Cash definitely is a play in my book.
Isn't that how Warren Buffett became a billionaire? Was saying, well, I've made enough profit here, I'll hold on to cash, and then he just waits for the market to collapse and he buys everything at a bargain.
Yeah, it definitely works. He's been in cash. He holds a lot of cash, I think, as we speak right now. So for sure, it's a strategy. It's just a lot of, there's an angle out there. Obviously, the SEC came out with rules that financial advisors can't just allow their clients to be in cash, because then they're not actually really managing their position. So there's a general bias to keep people in the market in some type of asset. And sometimes bonds can work in that way, but bonds also move very quickly. During COVID, the price of bonds jumped 20%. It fell over 25% after that high. So they're still pretty volatile. That's why there's that bias not to go into cash, is because financial advisors really do struggle to be able to play that card. I think they can move into some other creative plays, like a money market ETF type of fund. So they're still in a position, and it is just like cash. But I think that's why that bias comes out, is just because they really can't. The SEC makes it difficult for them to allow their clients to move to cash as a position.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, Arctic air is making its way south. They haven't called it a polar vortex yet, but I'm just waiting for the next weather forecaster to call it that. We're going to have record lows, I think, in the Vancouver area over Christmas or just after Christmas. North America overall, I think, might have some chill coming in. Is that boosting natural gas?
Yeah, it could be. I mean, we definitely are seeing natural gas get a little bit of a pop over the last 3 days, and it's finding a little bit of a bid here. And all we need is, one big cold blast like that, and we do tend to see natural gas take off in value. And I think you and I actually talked about this in our last call as well. It's pretty amazing how you can somewhat trade natural gas around weather and fronts. And the only thing is, when you're trading, it doesn't matter what you're trading. It's when you know something's coming, that's not the trade. It's when something happens that is a complete surprise or shock. So it has to be a fluke storm, generally, or some fluke data that was not expected that actually creates a big move in the market. So if this front becomes a lot bigger than they anticipate, that would be great for natural gas. But generally, knowing news isn't really a trade at this point. So it'll be interesting. We are seeing it move up a little bit simply because I think that cold front could be coming across. But unless it gets out of hand and gets a lot bigger than people expected, I don't think we'll see natural gas pop too big.
Has crude had an amazing run this year? Everybody always expects crude prices to drop after the driving season ends. It didn't really do that. It has come down, but now seems to be steady again.
Yeah, crude oil's had a tremendous run. It's had some pretty nice measured moves. It was actually on its way up to the $88, $89 per barrel target that I had from back in April. We got real close to it. We got about $40, $45, $46 a barrel, and then it started to consolidate and pull back a little bit in a nice, healthy way. But then we had Omicron news hit the market, and crude oil just got clobbered and fell from more or less $80 a share down to about $62 a share. And so that's taken the wind out of the sails. But we have been seeing crude oil come back to life over the past 2 weeks, and it's got a bullish pattern here. It looks like it wants to push back up to this 76, maybe even the $80 per barrel level. But the Omicron did a lot of damage to the chart. So I think we're still potentially several weeks away to getting up to $80 per barrel. And to get back up to that $88, $89 target might be a little bit of a stretch now going forward. So I do think there's upside in crude, but I think it's fairly limited because a lot of damage was done with the lockdowns that we're starting to see. Certain countries are getting more strict. Travel is slowed down a little bit. So I think that's going to keep oil under wraps a little bit.
Oh, yes. So cryptocurrencies, what kind of action are we seeing there, and what do you expect?
Yeah, well, Bitcoin's been struggling. It's obviously had a strong correction and traded down through about close to $45,000 recently, and it's trying to carve out a bottom here. It does look like it's putting in a bottoming pattern over the past 2.5 weeks. It's starting to come to life a little bit, but right now it's still stuck in a downtrend. I think if it can get above around $52,000, if it can get around that high, I think it'll be off to the races and start working its way back up. But right now it's in a downtrend, and a lot of sellers have definitely stepped in and driven the price lower going forward. And really, a lot of Bitcoin price action is starting to mimic quite a bit of what the stock market is doing. November we saw the high in the stock market. It was also the high in Bitcoin, and they've been under pressure, kind of fizzling out. So I think if the stock market breaks and starts to rally, we could actually see Bitcoin start to rally as well. It's starting to move with the general stock market sentiment. Not always, but more so now than it typically has in the past.
Chris, anything else you're keeping a close watch on right now?
Well, I think the key here is just to see which way the stock market wants to break going forward. Both the NASDAQ, the SP 500 have been trading in a sideways pattern, and there's a lot of volume, a lot of volatility, and so a lot of shares traded hands in the last month or so. And that's a good sign. That means people who are nervous about the market sold to new people who are comfortable buying it and holding at this price. So if price breaks to the upside, again, I think we're going to see a big rally. If we break these early December lows in the stock market, then I think you definitely don't want to be holding on. This market could slide a lot lower going forward. So really just be aware that we're in a sideways range, and whichever way it breaks is going to probably be a very good opportunity to take advantage of either the rise or the fall of the stock market. So that's kind of my view going forward here.
Chris, thank you so much for chatting with us, and all the best for Christmas and New Year's.
Hey, thanks, Jim. Always a pleasure. Merry Christmas.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.